Okay, so good morning over in London. Extra early good morning here on the East Coast of the U.S. If you live in California, I don't know whether it's yesterday or today. It's the middle of the night. I guess it's technically today. And this is live trading session number 34 for the year, August 23rd, 2013. And okay, I wanted to start off. I was actually putting something together last night, looking at something, and I thought this was I don't know if it's funny or sad or it is what it is. So let me just quickly show you this because that's a light moment. All right, so let me share my desktop, monitor number 2. All right, just going to show you this for a moment. Start off with a little bit of a light moment here. I got an email from a guy and he said, if you have an account for 5,000, you should be able to make 1,250 a week. So I said, all right, let's work with these numbers, take a look what this works out to be. I said, all right, if you make 1,250 a week on a $5,000 account, that would mean you're making $5,000 in a month on a $5,000 account. So if you had a $5,000 account, you could make $5,000 in a month, which means at the end of the month you'd have $10,000. And do the same thing the following month, and we're able to make the same proportion, you'd be able to make $10,000. So I kind of took a look and said, well, how would we be doing after 1 year? And it turns out at the end of 1 year, you'd have 20.5 million after 12 months, starting with a $5,000 account. At the end of 18 months, you'd have 1.3 billion. At the end of 2 years, you'd have 83 billion. And I said, oh, what the hell? I took it one step further. And so let's look a little bit more into the future here. I have a lot of my students, some people in this room right now have been with me for 5 years. I said, well, how would it be in over 5 years? And I said, well, at the end of 2.5 years, 30 months, you'd have 5.5 trillion. And looking forward 5 years, at the end of 5 years, you'd have 5.7 sextillion. We go from trillions to quadrillions to quintillions to sectillions. And if you look it up on Google, you'll see that they have names going out to all of the powers. So it seems to me, though, that broad brush, within 2 years, you should be the richest person in the world. I think the richest person in the world is Getty. Not Getty. I forgot who it was. I think he had about 50 bill. It could be the guy from Microsoft. Could be Gates. Not really sure. But 83 bill, you'd be up there. Certainly, without a doubt. After 30 months, 2.5 years, you'd have 5.5 trillion. So then you'd be the richest person. Carlos Sims, 77 bill. Okay. All right. So it would take you exactly. It would take you exactly till December. It'd take you 2 full years to have more money than the richest person in the world, starting with a $5,000 account. And if you could actually accomplish what I got in this email I got just yesterday from somebody saying, yeah, you got a $5,000 account, should be able to make 1,250 a week. So, these numbers are pretty crazy, huh? It's what people say, and they don't think about what they're really saying. It's just crazy. In theory, there is no. Hold on, let's see what that saying is. I'm going to stop sharing that for a moment. Let's see. It says, in theory, there is no difference between theory and practice. In practice, there is. That's a good way of putting it. Okay. So I was kind of reading about, the difference between reality and expectation. I was reading this old book from 1955, actually, and it was saying something to the effect that somebody it was kind of a manufacturing business, and there was salesman was trying to get the business, and he called up the potential client, and the client's like, well, why should I pay you $8 when I can get it for $7 from your competitor? And so the salesman's like, well, why don't you just go and buy it from your competitor for $7? And the potential client says, well, he's all out, doesn't have any left. And the salesman says, well, okay, well, if that's the case, we could sell it to you for $6 if we were all out. Got to think about that one. Okay, so let's jump in and see what the hell's going on in this market. I'm just going to close what I was showing you there. It's a little bit of light fun to get started here, and I need to share my desktop. Simon says if it gives me a guarantee, yeah, you'll get a guarantee in this business. That may happen, Simon. Okay. Let's see. I want to make sure I have my chat up just in case I don't want to miss anything. And all right. Let's. Okay. So looking at our charts, this is kind of just looking at I'm looking at the all charts here, just 5-minute charts, and setting up, kind of looking at what happened in the last 24 hours. I can quickly take a look at today, and usually we like the pound. So for today, the pound's about 30 points higher. At one point, it looks like it was almost 45 points higher. And you have a little spike here, which you don't see anywhere else. So that's probably news related. And we know it was. And what else we got? We got the euro starting 2200. So the euro's done pretty much nothing. It looks like it's starting to make a new high for the day. So it's probably close to a European breakout trade. In terms of Jimmy's bands, you can kind of quickly look at it and say it's all set up for a sell for Jimmy's bands. That's what we'll be cooking there. And in this case, you can see that the line's been coming down, so it's not as clear. But it's you wouldn't be able to tell. You'd have to look a little closer at that one. Looking at these guys, this one's the Aussie is a little bit lower than the opening, and the New Zealand a little bit lower in the opening. So these two, and the Canada making a new high here. These three are following the pattern we've been seeing all week, which is a weakening of the commodity currencies. This started a few days ago, and if you go to an hourly chart of say the last week, 130 hours, you can kind of get a feel for what's happened the past week. So you can kind of see that these commodity currencies, all of it out of nowhere, really, literally out of nowhere, the last few days have come down. Not really all three of them, and not really sure why. And you can see the yen. The yen has also come down, so the dollar has gone up against all three commodities and against the yen this week. The pound had been resisting it and kind of gave up. The euro, again, strong and gave up. And Swiss doing exactly the opposite of the euro. Almost don't need the Swiss here. It's kind of extra. To make this, one good thing about setting it up this way is you can see the $3 ones along the bottom. And they all seem to have got if you look at dollar Canada, for example, you look at dollar yen, different paths, but the dollar is showing strength there. Dollar's clearly showing strength against these guys. And also, as it eventually got to, showing strength against euro and the pound. So it's hard to call it here in terms of what the hell's going on. From here, I would go further and I'd look at my high-low charts. And if I put them into view here, I like to keep my high-low charts somewhat simple. I don't like to make it too voluminous. You are aware that if you wanted to take a closer look at Aussie, you would simply go to the Aussie tab, and you can see the whole year in one place. And I purposely do it that way so you have a real starting point. So you can see the Aussie, you can see right around at the time the Aussie started to go down from its multi-year highs, we saw a little volatility increase. And since then, this whole move down, there's been a little higher volatility than we saw before that. We've stayed within 100 up or down, and now it's really touching that 100 up or down, or a little more. So the volatility has picked up when it turned, and it started with a big bang here. So bigger picture, you can kind of see what's cooking here. But littler picture, what I'm concerned with here, it's not as clear. And trying to relate in any way the stocks to the whole thing, you could look and say, well, stocks are down this week, and so commodity currencies are down. Maybe that's why the commodity currencies went down, which would be a logical argument. But if you're going to make a logical argument, you also want to make sure that your logical argument, at least it holds water, looking backwards even a little bit. If you just look the week before, last week, you didn't have that. In fact, you had the opposite. So you can't say that because stocks are going down, commodities or companies are doing bad, commodities are doing bad, because just the week before that, that wasn't the case. So that argument doesn't really hold water. Stock markets in general are not in a consistent pattern anymore. You can see that DAX is doing nothing, the Dow's going down. So everything seems to be breaking out in its own area. The dollar doing the same thing against everybody, that little pattern, which has always been one of my favorites, that seems to have broken down into some extent. We've got the commodity currencies doing one thing, the Europeans doing another, and then the yen perhaps doing something different as well. At times, they're all doing the same thing, but there's no consistency to it for any length of time. There hasn't been any real consistency to it, so it's hard to zero in on any one thing to trade. As far as these yen pairs go, I'm pretty clueless as far as what the logic of trading the yen pairs was. I got an email from somebody today who was saying they like buying the yen pairs. They're in an uptrend, and the last certain period of time, days, weeks, which kind of makes sense. But it just doesn't follow to me why I'd want to say buy Aussie yen, looking at what Aussie's been doing. If I really wanted to be bullish, it would make more sense to buy dollar yen, because you know how these cross pairs work. You just multiply an Aussie dollar times dollar yen. So if you're going to buy, why not buy the one that's going up? Why buy the combination of the one going up and the one going up and the one going down? That's just the thing that I could see why I would, at the moment, don't see any logic in messing around with the cross pairs. I don't see any pattern of the yen doing the opposite of, say, what some of the others are doing. It seems to be doing the same thing in terms of the dollar. That's how I read that. Now, in terms of a preview today, you can see the same thing I put yesterday. I really have no idea. I have no idea what to do. And in terms of volatility, these numbers, 75 and 62 for the room to go numbers, these are at levels that it doesn't make a lot of sense to me to be just taking signals for the sake of taking signals. It doesn't make sense from the point of view. Well, let's look at euro dollar. That's probably a better example. If you only got 62 points to work with, that's all you got to work with. And let's say you're going to get a European breakout signal. Well, in order to get a European breakout signal and to trade it, you would need to cover the entire range of the day so far and more, right? So it would be the range for the day It would be the entire range for the day, the high to the low. Plus, there'd be a little adjustment. You'd have to go, let's say you were going to buy, if you're going to buy using European breakout, you got a 62 points is what the range has been lately. I mean, the room to go number has been lately. That's the actual room to go number of points. That's how much it's actually been moving, 62. So you take if you got a European breakout buy, for example, you'd have to take the entire range for the day, the high to the low, and then you'd have to, for a buy trade, you would have to, in terms of identifying your profit target, you'd have to go 3 points below the lowest price of the range, and your entry point is going to be somewhere above the range for the day. Actually, yeah, because it's going to be based on the close of the candle that's completely above. So you're probably looking at, let's say, something in the neighborhood of at least, say, 7 beyond the high of the range for the day. So if your range for the day is, say, 35 points, because it's been quiet so far, see if we can pump that size up to 22 so we can see these numbers. Yeah, make it bold so we can see it. Yeah. All right, so if your range is, say, 35, and you're going to have to wait, you're going to have to give it an extra 3 points, then your take profit target's going to be 38 points away. And because you're getting in with spread at least 7 points higher than the highest points of that range, that's assuming you're getting in 5 points above the high, adjusted for spread. So you're looking at 45 points. You're looking at 45 points already to range. And wherever that is in relation to the start of the day price, you can see that you really don't have that much room. Now, it's possible, of course, that the start of day could be right near the high, in which case you would have enough room to do the trade. But can you see in general, if that's the case, if it's already has, say, 38 of movement, to be able to go another 45 may make sense based on the start of day price, but perhaps not make sense in terms of the actual range. And hence, that's why it's not as simple as me saying just trade as a trade view, not saying this is something you see in the past all the time. For sometimes weeks on end, I would just put pound dollar, euro dollar, EB and JB both ways. In other words, when the volatility is enough, when you got decent volatility, then it's fine to do that, and just whatever comes along, take it, because there's enough volatility. Now, what would that mean by enough volatility? Well, look what happens when this number is 100. When that number is 100, you can see under the same scenario, to try to get another 45 out of it is not bad at all. It would clearly be within the room to go number very easily. So that's a big, a big part of it. When you're looking at those numbers, as they get too small, it becomes impossible, or it doesn't become impossible. It becomes difficult for me to believe that that strategy would make sense, and hence, I'd rather not say that I think it's a good idea to simply try to trade Jimmy's bands and European breakout, because it doesn't make sense from this point of view. It could make sense in a particular currency pair on a particular day at a particular moment, but it doesn't make sense as a blanket statement, as it would in other markets. When volatility is higher, it's not a coincidence that it does pretty good. But when volatility is low, it's not a coincidence that it would tend to do pretty bad, because it's not going anywhere. And by the time it actually is giving a signal, it's almost out of breath. It's kind of like a quarter-mile runner trying to run a 1-mile race. It's most likely he's going to get very tired. So although it looks very good at the first quarter-mile point, because that's a very fast runner, he's not used to running that distance, so he's going to get tired. I think that's kind of the same principle of what I see, right now when the markets have low volatility. And it's very easy with the benefit of hindsight to look at particular currency pairs or currency groups such as the commodities and say, well, why didn't we sell them? And I look at it as, I don't bullshit you guys. I try to be as straight as possible, for better or for worse. And what that means is I'm never going to tell you you're going to be the richest person in the world in 2 years. And that's unfortunate because that's what we all want to hear to cheer us up. Looking at the Aussie, for example, and looking at this now, if we were to go back a little bit more, just to go back 2 weeks further. So we go back another 10 days. So make that a 3. There we go. So it looked like this. And if we take these 3 days off and select data. So we take the last 3 days off, make that 55. It look like that. Whoops, didn't work. Let me try again. Select data. 55. Oh, we want to make that. Oh, okay, I want to go back to 40, 49. Okay, put that at 49. Yeah. Okay. Now, when it looks like this, to look at this and say that this is going down, I don't think it's so easy. I don't think it's so easy to be able to call that as going down, especially when you look at, say, the sister one right here. If you look at this one for the same time period. And certainly, I'm not making excuses. I'm just trying to show you the reality of what we have to deal with, so that you understand how difficult this is, and it's just not as easy as people who just write about it after the fact tell you it is. See, if you look at it like this, and actually format axis, you have to move that axis, change it to 58, and maybe make that one 51, something like that. Yeah, that's how that would look. Okay, so the point I'm trying to make here is looking at these two. And again, what we're talking about here is trying to sell, have the idea to sell this one, because we know that it does something like this over the next 3 days. That's Monday, so Tuesday, Wednesday, Thursday. That's Tuesday, Wednesday, Thursday here. And the idea is, well, how would you know that this is a good sell here? And without the benefit of knowing where it's gone. And the point I'm trying to make here is looking at this one, looking at that one, and looking at the other one, if you will, which would be the dollar yen. Okay, so what I'm going to do here, I'm looking at groups. So I got the Aussie, I'm identifying the commodity group, the pound as identifier for, say, the European group, and using the dollar yen to identify the yen group, if you will. So we're looking at the dollar, the euro, the commodity currencies, and the yen. Those are kind of the 4 groups. And what I'm trying to show you is that it's not so clear in time when you're actually doing it what to do with it when it's really not trending well. So let's see if that works. Yeah, okay. So after Monday, if we were to let's just do this so we can see what we're looking at here. And just trying to isolate. I know we don't want to make the mistake of trying to nitpick too much, but just to be able to look at relationships. Yeah, delete. And just this little study here is going to give us a feel for how the dollar, how things look in general. Certainly, if you're going to get, as you get more specific, you know, especially with the benefit of hindsight, it gets easier and easier. But when you're looking at it like this is how you'd look at it as of Monday night. Looking at that as of Monday night, to predict that this one would come down, you'd be predicting perhaps that this one wanted to go down and that this one wanted to go up. Now, looking at the charts here, I would think, if anything, I would be thinking that this one has a better chance of going down than up. Now, why would I say that? Because the lows, the highs are getting lower, and the lows are getting, well, at this point, not lower, but not higher. So it looks to me like this, from this little pattern, I would read this it wants to go down. And I look at this one from the dollar point of view and say, well, it's making new highs. It's probably going to go even higher. And then from this one here, I would say, you know what, I want to leave that one alone. So what I'd conclude from looking at these three charts is that this one here would be the best trade for Tuesday. So after Monday's price action, I'd be thinking to be long pound dollar looks about the best. Now, does it look perfect? Does it look perfect? It doesn't look perfect from the point of view that the Aussie is not making another new high. If the Aussie was able to take out these highs and it was up here, and the yen, okay, here, or even if the yen was a little bit lower than that, then that would be perhaps a really strong potential buy. I'm talking about one thing. It seems like we're having a major discussion of something else here. So let me see what we're discussing on this side here. I keep seeing this going on and on here. So let's take a look. So what level of room to go do you know it's going to be good trading? Over 100? Okay. Martin, room to go is the average of the high or low, whichever is greater for the last 14 trading days. Now let's see about this one here. We have this one popping in here. It's sent to me privately, so I won't put their name. I'll just copy what they said. Let's see what we got here. Because we can't do both, guys. We can't watch the chat and listen to me, so we can only do one at a time. So let's do this one first. If JB swing is 56 and the pair goes up or down 56 pips, then would you go ahead and buy sell the pound to its room to go? Just another way of looking at it. What are your thoughts, Jimmy? Let me read this again. If JB swing is 56 and the pair goes up or down 56 points, I have no idea what that means. I have to read it again. I don't quite understand the question. Maybe somebody can help me out. If JB swing is 56 and the pair goes up or down 56 points, if it goes down, I don't have no idea what you're saying. Guessing the higher lows. I don't know what that means either. Are you saying that if the room to go up or room to go down number is 56, then why not go the other way after 56? Is that what the question is? Is that what it is? Is that what you're saying, Ray? Jay? Okay, so he's not answering now, or he's typing away like a madman. A simple yes or no would have done it, but okay. Let's see. Okay, yeah, that's exactly what he's saying. So what he's saying is if, okay, so if on average the pair has been going 56 points, if it's been going 56 points beyond its started day price, would you expect it, if it goes 56 points, to turn around and go the other way? We could test that in the pound, Jays. We can just look at it. Yeah, well, the answer would be, so for, what do I think of that? The first thing I would think of is, well, why not look at a chart and see? Before I do that, though, I'm going to go ahead and do that now. But the first thing, just take a quick look at the charts to see what's, if anything's cooking. I'm just going to look at the all charts because we are doing live trading. So if anything special is cooking, euro dollar close to European breakout. I don't know if it did it or not. Let's take a look. Nope, no signals there. Pound dollar. Nope, no signals there. And dollar yen. Yeah, there was nothing now, but there was something before, very kind of minor. We'll get to these and see if you guys can give you the challenge to see whether you could figure out what we would do based upon our systems for them. But going back to this example, if we go to pound dollar, and so what you're saying is, let's see how it would have done in the month of August, for example. This is how you could test your little theory. What you could do is just take the month of August, so zoom in on it. This is the month of August, and we know what our room to go numbers were. So today's number, for example, the room to go number today was 75. That's what you see on your daily trade finder, and it comes from the today's number comes from the day before. So when we're looking at this schedule here, we would need to make sure we're looking at the right information. So you don't want to do a quick study and get it wrong. So your room to go was 81 for the first of the month. If you sold it after it went up or down, or bought it after it went down 81, how would you do? So I'm going to quickly do this, not quickly, but I'm going to do this for you. So what I'm going to do is I'm going to insert a column, and you can see that the bigger move on the day is more than 81. So you're going to be, well, actually this could be confusing. Let's get rid of that column. Let's hide that one. And let's delete all of that stuff. Just my own quirk, I like things to be clear. I can't work in a mess. That's just my personality. I have trouble working in a complete mess. So let's go back to where we were looking. And okay, so we were going to start and say, all right, so if we want to know 8-1, we'd have to start with our room to go from the day before. So the actual room to go numbers are always one day off. So what we could do what we could do is we could do this, right? Edit, copy, just move it down one. And this way we don't have to edit, paste special values. So now we have them lined up where they need to be. So we don't have to worry about that looking from the day before, because some of us get easily confused, which is understandable. So okay, so now this is the room to go number for that day. Remember, we moved it down one. So when you normally go to your charts, you wouldn't do it this way. But today, you'd have to look at the day before. Hopefully that didn't confuse anybody too much. Some of you always are going to get confused. It just takes you longer to pick things up. You need to review the recordings when you're confused. Okay, so here we would sell it after it went up 81 points, and assuming we just kept it to the end of the day to keep it simple, we would lose 5 points plus spread, so we'd be -7. And I'm just going to change that format cells number, and I'm just going to put them so we get parentheses. All right, so here we would sell it. I'm sorry, here we only would lose 5. Okay, because it went down, so we were going to buy it, and so at the end of the day, we'd have to sell it, and it was still 81 points higher. We were going to buy it after it went down 81. We'll forget about spreads a little bit just to try to make this doable without too much mental work on my part. I just can't handle it. All right, so here we would lose quite a bit. Obviously, we would sell it after it went up 80, and we'd have to cover it 171 points higher, so we would lose the difference and an extra 2 points, so that would be 93 points. If I do it wrong, just let me know, and I'll correct it. It'll be close, but I could make a little mistake. Here, room to go was 89. You didn't quite get there, so you wouldn't do anything, so that would be a 0. Here would be a 0. This one would be interesting. Actually, okay, so how would we do on this one right here? Who knows the answer to that? I hope you don't mind the way I always do that. I always kind of put you guys on the spot and make you think, but I'm thinking is, exercising your brain, like it's very similar to exercising your body. When you exercise it, it gets stronger. How would you do on this day? No, I don't know, right? I don't think you need to look at anything. The answer, one thing I like about my man Ray, he always gives it a go, and I appreciate that. That's good. It doesn't matter which move came first, does it? Try to think it through. Alan, good try, but you don't need to know what move came first. Oh, no, maybe you do. All right, let's figure it out. Okay, so I don't think you do, though. Because when you think it through, here's what I'm thinking. Maybe I'm wrong. And again, I don't rehearse this stuff. I'm not putting on a monkey and grinder show for you here. I'm just being as straightforward as possible. Okay, so after it goes up 85 points, what are we going to do? We're going to sell, right? And after it goes down 85 points, what are we going to do? We're going to buy. So at the end of the day, we're going to have bought and sold, so we're not going to have a position. What we're going to have is 2 times 85. We're going to have 170 points. Does that make sense to you? Am I getting that right? Maybe I'm looking at it the wrong way. What do you think? Ray says no. Lost me. Okay. Okay, nobody gets it. Okay, Prem says understood. That's good. All right, Ray says no. All right, lost me too. Are we trying to figure out how many points you can gain? No, we're trying to figure out the results of the trade. Alan got it. So Alan got it, and Prem got it. Ray disagrees. Martin's lost. Simon's lost too. All right. So a couple of them got it. Okay. Well. Okay. I think I get it. I wasn't thinking about going both ways. Well, why not? It's good with me. Abe says 115. I don't know where that number's coming from. Peter got it. All right, so a lot of people are getting it. A couple are not yet. I'm going to go over it once more. Try to forget about whatever it is you're thinking about for the people who can't get it, and just listen to what I'm saying. Suppose this number was 0 at the end of the day. Whoops, escape. Let me try that again. Okay, so what I want to do is this. I'm going to go copy, edit, paste special values. So now what I've done is take all the formulas out of this page. Without any formulas, it's easy to mess with the numbers. 0. Suppose it was 0. Then how would you have done for the day? After 85 points, you need to take action, right? So when it goes up 85 points at some point in the day, you're going to sell it. And at the end of the day, if it was at 0 and you sold it after it went up 85 points, you would be plus 85. For you guys who don't get it, do you understand that much? Yes. Okay. Now, on the same day, you would have bought it after it went down 85 points. And at the end of the day, it was at 0. Therefore, you bought it after it was down 85. At the end of the day, it's not down any. So once again, you would make 85 points. So you'd make 85 points by selling it. You'd also be making 85 points by buying it. No matter what happened first or second, it doesn't make any difference. You're still going to make your 170 points. Martin got it, and Simon got it. Okay, we're all good now. We got it. So that would have been a really nice day. So far that little system, it's done 3 trades, and it's up 72 points. Now, how do you figure out how a system's doing that's up 73 points after 3 trades? You just go equals 72 divided by 3. And you say you're making an average of 24 points per trade. You've done 3 trades, and you've made 72. So on average, actually it would be 4 trades because you did 2 trades here. So you divide by 4. So for doing 4 trades, you're making an average of 18 points a trade so far. Overall, in terms of points, you just total it. So you go equals this, equals M, equals what you got plus the current day, and then you just continue it. And that's how you'd be doing so far on a daily basis. That's a pretty big drawdown so far for only being up 72 points, but let's continue. Okay, well, this day here, we're looking for 94. We didn't get it. This number becomes, oh, actually, we need it. Yeah. Okay, 94, we didn't get it, so that's a 0. We didn't get it. That's a 0. That's a 0. That's a 0. This day here, it was up 88, or 88 was the number. 100. It was up 101. So we'd sell it after it was up 88, and at the end of the day, it's up 54. So with spread, you'd be buying that back 56 points higher, and you sold it at 88. So 56 it would equal 88 minus 56. So you'd make 32 points. So, and you could also keep track in terms of the number of trades you've done and the average per trade. That's just another statistic. Average per trade doesn't mean much. What you're interested in is how many points you're making, and then also how big your bad trades are. That's the other thing that's important. All right, so this probably, what size is that? 9. Let's make that 9. No reason that should be better size. Okay, now this one here, this is a loser. So same thing, you're going to sell it after 87. You got to buy it back after 138 plus spread is 140. So equals 87 minus 140. So you'd lose 53 on that one. Joined a little late. I don't see how you get the second 85 V points, please. Second 85 V points. Okay, I'm not sure what you're looking at. Points. The second, I don't know how you're getting the second 85 points. All right, I'm not sure what your question is, Noel. I don't know what you're talking about. When you say I don't know how you get the second 85 points, I'm not sure what you're looking at. I don't even see 85 points anywhere here except over here. Oh, how do you get the second 85 points here? We're back on that. Yeah. Okay, you're going to sell it. We're talking about, you see what we're doing here? We're saying whatever the room to go is, if we put the trade on in the opposite direction and held it to the end of the day, how would we do? So in this case, we would sell it after it went up 85, and we would buy it after it went down 85. So we'd be left with no position. We sold it 85 points higher and bought it 85 points lower, so we'd make 170 points. That's how that would work. All right, so here you got very little range, so that's a 0, or very little movement, that's a 0, that's a 0, that's a 0, that's a 0. So we would bring this down, copy. And over here, we'd make a little something. We would buy it out, we would buy it after it went down 82, and it only wound up down, and then we would buy it after it went down 82, and it only wound up down 72, so we make 10 points. So we would be 61, edit, copy. So that's how it would look, testing it for this month, that's how that would look. You'd be up 61 points with that particular strategy of saying, I'll just go against it. And, there's no stop losses or anything. If I tried to teach this as a system, the first question you guys would be asking me is, where's my stop loss? There is no stop loss. What? No stop loss, so it's just theoretical, but that's how that would look anyway. So today, it would be a case of 1.5587. And you would simply add 75, so equals, the point you want to sell it is when it equals this price plus these extra 75. I think it would look like that, but I'm only guessing. Yep, that would work. And then the way you would buy it would be equals this one. We want to buy it lower, so minus, minus 75. Yeah. So that we would buy it here, sell it up there, or buy it down here today, and then just hold it for the end of the day and see how it works out. So at the moment, 15562. Let's see if we've even gotten that high yet. Where's pound dollar? No, not quite. Not quite. Let's sort of take a quick look here, just in case by some chance something's cooking here. Nothing cooking, nothing cooking, and nothing cooking. Could continue that example a little longer. What I want to do now, though, is I want to close that, and it's going to ask me, do I want to save? I don't want to save any of that stuff because I don't want to mess up my charts, although I can always go back and get a new set. Oh, somebody asked me this morning, somebody said that they had trouble opening the high-low charts in the email I sent you. Now, keep in mind, when I send you an email these days, let me just get one. Let's see. So just give me a sec here. Just so you know this, where we're at with this. So, okay, so this is my email box, nice and clean. Just got one Trade the News. See, Trade the News sends me little quick updates. So, all right, we got the UK GDP revised slightly higher. That was it. Then I kind of looked through this just to see if anything's cooking. A little bit on the currencies here. Nothing much, really nothing much going on. Subdued. I love that word, subdued. That means Jack's not going on. Jack's going on. Delete. Okay, so we got nothing in the inbox, but what I have is folders, sent. It's just going to, oh, I don't have any left. I threw them all away. I'm a little too efficient. I was going to show you last night's email. Okay, we can look at it in the members section. Same thing. Okay, so here. So when you get this email from me, the first one is YouTube, and I did get one complaint from one guy that I'm giving the stuff away for free on YouTube now, and he's paying for it, and he didn't like that idea. So I changed the YouTube so that they're no longer under my name. I got them under a secret code name so that other people would have to do a lot of work to find them. That keeps him happy, and probably there's a couple more of you feel that way, so that's okay with me. I fixed that up. But anyway, just click on this, and it's going to give you the Daily Trade Finder recording right away, so there's no downloading or anything. I thought that was a cool feature. The other one, the one with Hightail, it's going to give you the actual MP4, and it's going to give you the high-low charts, and it's going to give you the PowerPoint. Somebody had trouble opening the high-low charts today, and I got an email on that. And so the answer to that is to keep in mind, if you can't open if you're having a problem opening it on Hightail, you also can attach to the email is the high-low charts and the PowerPoint. So I actually, in the email I send you the link to the latest one. I send you the Hightail. And I also send you as an attachment the PowerPoint and the high-low charts. So if you can't open it there, it'd be probably easier just to open it directly from the email anyway, if you want to look at that at all. A lot of people just look at this now. It's a lot easier. Just listen to the recording quickly and be done with it. Oh, here it is, see? Could you please check the file? I have tried a few times, and on all of the error message, the other two files, no issue. So he had trouble opening the high-low charts, spreadsheet file, he calls it. And the answer is, it's as simple as attached to that same email, there is the high-low charts where you can just get it there as well. So that solves that problem, and I told him that there. So I just wanted to mention that to you. Okay, let's kill that. It was the Excel file as an attachment to the email that does not open. Oh, it didn't open there. Oh, well, that's a horse of a different color. All right. Okay. Well, then, how about the one attached to the Hightail? Maybe that one. But keep in mind, guys, when if for some reason, one day out of every few months you can't open the high-low charts, remember, they look pretty much like the day before. They're not going to look that much different. And you do have, there's two places you could possibly get it, and also the highlights of it. You're going to be seeing the highlights of it. The most current information is going to show up. And when you think about it, the high-low charts is made up of this, which is in your PowerPoint. That is in your PowerPoint. That's in your PowerPoint, and that's in your PowerPoint. The only thing that's not is the real detail for the whole year, which I'm not sure I think you could get by without one day without having that if it came to that. So just so you know, not a big deal. All right. So if you to look at this little idea that we were looking at, the idea of trying to go against it, that is not that much different. The idea of trying to use the room to go number and say I'll go the other way when it gets to the room to go number. That's not that much different than the old 75 and 100 system where we used to some of you remember that, where in the pound we used to say if it goes 75 or 100, we would consider that R1 and R2. That's what, for you guys who are new, you probably don't know about that system, but that's what somebody pointed out back here. That's what they were saying, the idea of R1, R2. So that idea is not lost upon us, trying to go against the volatility. It's something you can consider doing. You would want to be careful with that. It's not my style. I'm not a top finder and a bottom fisher. I much prefer to trade with the momentum of the way it's going. So although that system showed some promise, I overall don't care for that too much. It's just not me. All right, let's. I think we're done with that subject for now, so I'm going to put this down for a moment. And let's see if you can identify. Here's the dollar yen today. So I think it's important when there's nothing going on like this. There ain't a hell of a lot of wisdom I'm going to give you. We've had like a 6-point range in dollar yen, maybe 10-point range since we started an hour ago. So there ain't a hell of a lot I'm going to be able to tell you what to do with that today. Obviously, the market's dead. But what would have been, based on our systems, what would have been, with the information, you can see all the information you need to give me the answer on this is on this page here. So what would have been what would have actually, maybe it's not, yeah, it actually is. What would have been the trade today in dollar yen based upon what you see here and based upon the systems, Jimmy's bands, European breakout? What would have been the trade? Does anybody know? And the reason I ask is not to give you a hard time, but just to see whether you know how to use the systems or not. Okay, Abe says buy. Abe says buy, but I'm not sure where the buy is coming from. Based on what? Why would you buy it? What would be your basis for buying it? We don't have a European breakout because this is the high and it didn't make a candle completely above it. And we're in an upswing, so we can't get a Jimmy's band buy. So I don't think there was a buy. Well, you could buy with start of day, and that's with the benefit of hindsight, that would have worked pretty good. But based on Jimmy's bands and European breakout, what I was looking for from you guys is, as of the London opening, Ray hit it on the head here. You have this, that's a sell signal for Jimmy's bands. It's happening before 7 o'clock, and it is the dollar yen pair, so you could actually consider taking it at any time. But if you were going to start looking at the market as of 7 o'clock, you would look and say, well, we got to sell before 7, so what we could do is simply, I'm just going to zoom in a little bit because we just wanted to show you that from here to here is 60 points. So you do have an upswing, then you have your candle, so that is a sell. So if you wanted to, you could do this. You could say, okay, What's been the high of the day so far? Right here. As of right here, and that's been the low so far. So you'd be a seller right here at this price here, which can't quite make it out. I have to look at the information box. It's 05. So you'd be a seller at 05, right at that green line. And you'd put your stop. Your stop would be 3 points above here or 20 points, whatever's more. So you're selling it at 05, so you put your stop at 25. So your stop would be edit, add arrow, be up here at 25. That's your stop. Your entry point would be here. If you're going to try to make 20 points, it would be 05, 95, 85. It would be down at 85, but we know you have to cover your spread, so technically it would be 85 because that's what you put on your charts. That trade, actually, you would have been out of that trade. Well, actually, maybe not 85. It only went down to 84. You wouldn't cover your spread at this point. It'd have to come down to 83 on the chart here, even though you have the 85 order in the market. Hopefully, we all understand the spread by now. So you would have got a fill of that, not there, but you would have got your fill way over here. A very short-term trade. It would be a case of going in and saying, okay, I'm going to risk 20 to try to make 20 if I'm going to go 1-to-1. If you had a view that dollar yen was going down, you could have a profit target all the way down to 97.82. So you could have a profit target more than 100 points lower than this profit target. But that, again, you'd have to have a view. You think it's going down now. And it's a hell of a lot harder to go down 100 points than it, well, from here, you'd have to go down 120 points to get to room to go. From here, it just needs to go down to 20 points. And this is something we've brought up over and over and over again about how it's much easier to get 20 points than 120. Just the same as it's a lot easier to run a quarter mile than to run a mile and a quarter. That would be the same idea. We always use we always use a minimum of 20 points on any trade. On any trade we put in, we should risk 20 points because when you figure in the spread and everything else, you're really not giving it much of a chance if you try for less than 20 points. Now that's assuming you have a 2-point spread. Again, it's really more a factor with the spread cost. And the second idea would be if you're going to do a trade, and you're going to put in a 5-point stop, are you really doing a trade or are you just buying a lottery ticket? It's okay to buy lottery tickets if that's the way you want to trade, but if I think it would be, I don't know. I personally, I think I've said this 1,000 times that 20 points is the minimum. If you want to put something in for less, you can, but you're really not giving it much of a chance. Okay. All right, so that's this one. The other two, I don't think anything's cooking with them. Pound dollar. All right, now why don't we get a trade here? The idea would be, cheers, Ian. Why don't we have a trade here? It looks like a European breakout trade because the first candle completely above the upper line would be here. So edit, add arrow. So why don't we have an European breakout buy signal here? Because it's lower, I don't want to look bad. That's one reason. But the main reason is it is or it isn't. Now we have Alan saying no room to go, which is correct, and we have Martin saying it's news related. Okay, now let's think about the difference. You're both correct. Prem says no room to go, news related. Absolutely correct, but let's make sure we understand. From our rules, this trade would be an EB buy if we could put our stop down here and we could add that number of points and not be beyond room to go. In this case, it would be. It would be something like 85, 156.85. So it wouldn't have room to go all the way up to there. So from that point of view, it gets disqualified from a room to go basis. And that's what the robot would understand. If we were trading this with MT4, with MetaTrader 4, it would understand that, okay, that's the way it works. That's the way it would work. MetaTrader 4 would say, okay, it doesn't have room to go, no trade. Now the other part of it would be if the other part of it is the news related. Now we got a revision from 0.6. That's what they expected it to be. That was what the actual number was last time. And equally or more importantly, that's what they expected the revision to be, unchanged at 0.6. It actually got revised slightly higher to 0.7. And probably based upon the size of these candles, these 2 to 10 minutes following that news, and it equals the length of the whole day, it probably has to do partly with getting above the highs of the whole day, but more importantly against the news. So the news is a little better. That caused the pound to be revalued slightly higher. So one of the reasons the main reason the pound probably made this move, and it's always only a guess, is because the news was a little better than expected. Because of that, we'd want to be suspect in taking a trade to buy way up here because we knew it was driven by this news. And so we don't have room to go, so that would be no reason to take it anyway. If we still did have room to go, we'd want to think that, well, the number wasn't that great. It was a little better. So even if we had room to go, you'd want to be thinking, maybe I'll let it go because it's not really justified to keep going because the number's not that much better. Now, if this number was 0.8, well, let's say 0.9, and our trigger number for a buy was 0.8, we would expect it to be able to get at least 50, and so far it's only gone 17. Well, then to think it could have another leg in it, that would make sense. But because the number was less than what we think would trigger a 50-point move, that would be another reason not to take it. Now, what I just said is perfectly okay for me. It's probably okay for 3/4 of the people in the room, but for 1/4 of the people in the room right now, what I just said confused the hell out of them. So I'm going to repeat it a little slower for purposes of the people who are new. Okay, so what we're saying is, even if there was no news to worry about, if you took the news away here, you would have a potential European breakout buy signal because you got the first candle completely above the upper band or the high of the day line. It's completely above it. It's completely above the high of the day, potentially a buy signal. However, when you put your stop where it believes to be, 5 points below the low of the day so far down, 3 points below the low of the day so far down here somewhere, when you add that many points to where you'd be buying, which is the close of this candle plus 2 points of spread, it goes beyond the room to go number. So there's no trade from a European breakout system point of view. Now, the fact that there was news and that drove it up there, we would question as traders beyond the actual technical system how that news impacted the price. In this case, it would cause it to go up. And then we think about it further. Should it cause it to go up, 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 or just up? In this case, the 0.7 not being enough to expect a 50-point move, and we would say that there's a good chance that could peter out. That would be the thinking. Okay, got it? Good. All right, so that's that one. And now from looking at it, 56 points, room to go up. JB number of 56, but next thing I would look at is say, okay, from what I see right on the chart right here, and I could go back if I thought it was necessary, but from this low here of around 70 up to here, that's more than 56 points. So I'm setting up to get a JB sell at some point. And that's something I know will come into play later on. And I'm just trying to get a feel for what's going on here. Doesn't mean it's a trade I want to take. It just means that right now I've met my swing requirement and my candle requirement, my 36 candles. We're getting there, so to speak. We're getting there. That would be another thing. Now, the other thing we talk about is 11 o'clock. That's why we came in today. 11 o'clock, sometimes we see turns. So we could go through all the pairs and see whether something looked a little funky at 11 o'clock, and that would be a potential trade if that's something you want to take a stab at, so to speak. All right, let's just look at the euro, just for completeness sake. And again, nothing, absolutely nothing cooking from a Jimmy's Band point of view. 46 points. We got a high of 70 and a low of 35. So that's only 35 points. So we're in an upswing. And we have, since we have 36 candles in a row from above, so starting from above, we got 36 above. We haven't had a candle completely below. So we're all set up for a JB sell based on this line. And again, don't mix up a potential sell signal when it makes a candle below here and a trade you're going to do. It just means that it's going to give a signal. The only reason you want to take that signal is if you have an opinion that's going to go down. The signal itself doesn't give you that opinion. You have that opinion and use the signal as an entry point. It's just, you got to understand the distinction, as a lot of people don't. And they get very confused with what they're supposed to be doing. See, what you're supposed to be doing needs to come in from inside your head. It doesn't come from the chart. Okay, a couple more questions here. I kind of didn't get to them. If you're doubling up on a JB trade, now this question, guys, just for the people who are new or people who have trouble following, if you're doubling up, we're not doubling up here because we didn't do the first trade. I just want to be very clear on what's going on here so people don't get confused. And, you know, the reason I like to do it this way is I get totally confused. Right now I'm trying to do some stuff with the internet. I'm trying to create some stuff on the internet, and I get very, very confused with the tutorials. You know, they just blow me away in a matter of seconds. So if you get blown away when I'm talking, I want to try to avoid that situation as much as possible. That's why I try to be as clear as I can. The question Greg is asking, if you're doubling up, okay, well, again, we need to work on the terminology. Not there's anything wrong with what you're saying, Greg, but just so people don't get confused. This signal here to sell is technically, if you didn't do that trade, if you were waiting for 7 o'clock, for example, you wouldn't take that trade, but you could take this one. Now, the questions Greg is asking is hypothetically, if you had taken this trade and you'd taken this trade, doubling up meaning you sold it once, you'd be selling it again. So I don't like to think of it as doubling up as much as I like to think of it as a separate trade myself personally. The reason I'd be adding to my trade is not in some way to have a better sell price because the price is moving in the wrong direction. It's just a case of we've seen it enough to know that it works more than it doesn't. So independent of this trade, that's a decent trade to do. But be that as it may, let's read Greg's question. If you're doubling up on a JB trade with a 78.6, would you trade your original trade stop loss to the stop loss of the 78.6 trade? Okay, so the question is, if you sold it here, you'd have a normal stop over here somewhere. If you sold it here on the way up, would you change your stop on your initial trade down here to wherever you're going to put it on the 78.6? I would say that doesn't suit. If you were doing it with a robot, it wouldn't do that, no. So the answer is no. You'd leave the first one with the stop it have, and the second one with the stop it has. If you really felt strongly that that pair was going down, and again, I think the whole key point I cannot stress enough is the idea that you're not doing this trade or this trade for the sake of doing a trade. You're doing this trade or this trade because you have a strong feeling that this is a good trade that's going to work out. And you want to be selling that currency pair. You want to be betting on that currency pair going down, not because it gave a signal, but because you think it's going down. So there has to be something more to it than just seeing some kind of a mechanical signal. I hope that's clear. But clearly, you could. All right, Greg, gotcha. And just to reiterate for the other people, you could, if you wanted to, change your stop on this one. When you figure out your stop for this one, you put it way up here somewhere. You could adjust this one and put it up there as well. You'd be risking a little more money on the trade, but if you felt strongly in the first place about the trade, well, if that's your trade for the day, and that's what you're doing, and it's within your room, your daily stop loss limit to do that, you may want to do that, or not. It would be your choice to do. As far as a systematic approach, where you would have a robot do it for you, it wouldn't make that adjustment. Okay, I think we got that. All right. What do you think of the market moved up against? What do you think of the market moved up almost 20 points before the news? I think you'll find that half the time it gets it right and half the time it gets it wrong, Laszlo. And I think what you'll find is, I think what Laszlo's pointing out, guys, is this. Right here. So 10 minutes before the news, 5 minutes before the news, at news time. So it did move up, this from the low to the high 20 points, but more like 15 points in the 10 minutes before the news. Well, that 15 points in 10 minutes, if you look at the charts here, you can see 15 points in 5 minutes, 15 points in 10 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 minutes. That seems to be very normal looking at this chart. So, and you had it right over here. And so it was already, you see it so many times on the chart here that to think that there's some relationship between that 10-minute move and this move, I don't think so. And so I don't think that people knew the news before the news, that kind of a thing. I think that's, there's nothing there to support that. Okay. You're welcome. All right, what do we got here? Okay. The start of the fib was just before 7 a.m. How long before 7 a.m. would one consider? Okay, that's a good question. How long before 7 a.m. would we consider a Jimmy's band signal to go for a 78.6 after 7? Who remembers? How long? We've quantified this. And again, it's always a judgment call, but what did we say? Who remembers? Yep, that's pretty much it. 5:30 or something like that. 5:30. Very good. Yeah. So if it's within an hour and a half, yeah, within an hour and a half before the market, before Europe starts, somewhere in that area. So in other words, what I'm looking for is I want the signal to have occurred somewhat currently, not like 6 hours ago. I want it to try to be relevant. And again, that number 5:30. If you set it up as a MetaTrader 4, it would be absolute. In terms of trading it, it's one factor among many to consider. But it's just something we've identified as not a bad deal. But again, the main thing, guys, is that we're not just going to take a signal because a setup occurred before. Right at 6 o'clock, we went through the lows, and now it's at a 78 retracement. That wouldn't be the reason to take the trade. The reason to take the trade is you're looking for that trade. What does that mean? Well, let's say, for example, you're somewhat new at it, and you're still in your demo account, and you're like, well, let me just see what Jimmy would have done. Okay, Jimmy says today, for example, this is as an example, he's saying buy euro dollar. Oh, okay. I see that the euro dollar at 6 a.m. London time gave a Jimmy's band buy, and here we are, it's 7:15 a.m., so it's past 7, and it's now retraced from the low of the day so far to the high of the day. It's right at that 78 retracement, and Jimmy's saying he likes buying euro dollar today, so I'll take that trade, and I'll put my stop somewhere below the low of the day, and I'll just, I'll risk that because I'm looking to buy it, and this will be an opportunity to buy it. My other choices are to wait until we turn around and go all the way through the high of the day so far, and that may be too late because I may not have room to go. And you could actually figure out these numbers in advance. You know, at any point in the day, whether or not a European breakout signal when it occurs is going to be tradable or not, just by figuring out the numbers in advance. And again, just using rough numbers should be fine. Okay, what else we got? Let's say, as in the sell signal that we would, okay, we got that one. Okay, understand. Okay, well, it looks like we got everybody covered there. All right, that's good. All right. Okay, let's take one more look here. Now, we were considering on this one here with the GB, if we did get a 50-point move, we could have considered the 1 minute 60 SMA, but we didn't get 50. As you can see, it went from 08 to 38, so it only went 30, so there would have been no shot at that. This one here, you can see this is not doing that much. On the day, it's got a little bit of a gain from 70 to 95. It's up 25 points on the day. At one point, though, it did have a decent run up. But in terms of right now, we got nothing special cooking. And this would, yeah, there's nothing special. You still actually, this little trade, which did make the 20, not doing anything really. I would do this though. I can tell you this, and again, I'm very risk-averse person, trader. I mean, that's just the way I am. If I had taken this trade and I had 100% profit in it, my stop loss would now be where I got in the trade at. I would not let 100% profit, actually 150% profit, turn into a loss. I just wouldn't do that. Just like if you bought real estate in London and you paid £1 million for it and it was worth $2.5 million, I really doubt whether you'd wind up losing money on that. I think in that case, the fact that you had 150% profit would be very clear to you that you need to walk away at worst, break even, but potentially making money. And if you think of it the same way, no matter what your investment was here, you were risking 20 points and you had 20 points. So you had 100% profit in the trade. You really got to think about that. Goodbye, Alistair. We'll see you tomorrow. I know it's a little tough. We're getting past time here and people got to go. So I don't want to continue too much longer. People feel I kind of rob them, which is kind of true by going on beyond the time. So really nothing cooking here. This is, I don't see anything special here. I really don't. And I think today, good potential to be another dead day. I think the market needs to figure out what it's up to. I think the U.S. is very confusing. Nobody really knows what to do with this. So I will see some of you tomorrow for live training. What I'm going to do now is, like I usually do, we're pretty much done. Anybody needs to go, you can go. Get going. I like to take any last-minute questions about anything, anything on people's minds about anything that's trading related, hopefully. Any ideas they have for trades, whatever they want me to take a look at, I'm more than happy to do it. I'm up, and it's kind of a normal hour for me, so I don't mind being here. So go ahead. If you want to pop anything in, go ahead. But I'll give you a couple of minutes to think about it, and I'll come back. Thank you. Okay, I just got one question from Greg. This is a silly question. Uh, what do you think? What do you think would have to happen for the markets to get traction and move somewhere? I don't know, but if they don't start moving, I'm going to have to move somewhere. I don't know. I think the market's very confused. I'm certainly extremely confused with it. And for me, it's August, so I don't really mind. It's a good month to just, I love being out in the sun in this weather, and for a few minutes anyway. I'm kind of one of those people now that I'm not really a big fan of the sun. I'll only take a few minutes a day, But I enjoy what I do. Go to the gym, and my wife and I have been doing little day trips and just keeping busy, and kind of not bothering with the market when it's not good, because as I said so many times here, you can actually lose money from working. If you call trading working, you can actually lose money from working in trading. Every other business, if you work, at least you make something. And I always feel something's better than nothing. And as I mentioned here, in the banks, it's different, because in the banks, you can actually, because you don't have to pay spreads, you can buy on your bid and offer prices, and a lot of times the market doesn't move, and that happens for you. You can kind of like try for just a few points, 3 or 4 or 5 points, and sometimes you just, taking advantage of little tiny things you can't take advantage of. Um, you can't take advantage of necessarily at the retail or the independent trader level, the level we're at these days, me included. So there's nothing really for me to do either when the markets are like this, And for discipline's sake, I don't like to wing it. I don't like to just um, get in there and take chances unnecessarily because uh, chances are I would be 50-50, which means it wouldn't cost me anything. But the idea is the what if scenario would be, well, what if I just took a string of losses and it added up to a significant amount of money? I've now lost a significant amount of money, and my heart wasn't into it. So why would I want to do that? It doesn't make any sense. I'd rather wait, and when I see something I like, make a bigger bet. And that seems to be it. So I don't really know what's going to give the market some traction, make it move somewhere. I really don't know. We've had a lot of movement this year, and with the benefit of hindsight, of course, I kind of feel um, should have been able to catch more of it. But again, it's easier said than done. You know what it's like in the real world of trading, and I'm hoping things start to get better. But we need more volatility certainly to get things going. I don't know when that's going to occur. The euro, the euro's, because it's the second biggest currency, if it's not moving, it slows down all the currency markets, because it's such an important currency. We've had the advantage of it being in favor and out of favor, mostly out of favor, the last 3 years, and it's had some good ranges. So, hopefully we can get rolling here. A solid story for any country, um, like for example now the sell Aussie, sell New Zealand story is good. That seems to be still happening. The buy dollar yen story, the selling of the yen story, still seems to be happening, but it's become very difficult when I look at it. If I look at my high-low chart on it, dollar yen, it's hard for me. When you look at that, it's had a nice uptrend up until about May, but since June, if anything, it's been more or less on the downtrend. And in spite of that, it's also had lots of little upspurts. So it hasn't been easy, to trade this. It was much better on the way up. And really, you can kind of say it kind of peaked quite a while ago. So that's a hard one to say where this is going now. It's always easy to go backwards, guys. It's trying to get it right at the current time, Somebody sent me an email saying they thought it was a buy right over here. We saw that on the 96.50, right, a little lower than it went, and they were pointing out, you've got a little bit of a godly pattern going, and to buy it over here somewhere. And I was like, yeah, well, that looks good. I wouldn't. It looked good. Didn't quite get there, but even though my own view at the time, I don't remember where it was, I was thinking negatively about it. I didn't disagree that maybe it can go up too, because it's just not clear. It's not like a strong view. If you take away this one day here, this looks clearly like a nice little down channel forming. And now with this little day here, just this one day, it kind of makes it look different to me, because it doesn't have that clear down pattern going. Now it looks to me like maybe it wants to go up or down. So it's just not clear. It's not clear where I'm willing to go in and make a bet on it. And given the 4 days before it, they were so tiny, it's hard to make a judgment. So I don't know, Greg. I hope it picks up. I'm waiting for it to pick up. Hopefully, it's the summer doldrums. The euro also has been kind of a tough year. It's been back and forth and back and forth. Uh, pound also had that nice trend at the beginning of the year, based upon uh, what's his name, Carney coming in. Then from there, it's been sideways, and taking out the lows for the year over here. One would think this is a sell, and going back up and taking out these highs, this looks like a buy. Taking out these sells, these lows, it looks like a sell. It's again, when you're just basing it on charts, uh, you could look at any chart where it worked, where it kept going up, and go look at how perfect that was. But you need to make sure you also say, well, look at how shitty it was, and look at how shitty it was. So that's why I'm not really a big fan of just straight technical analysis. It's always much easier said than done. So some people would look at this, for example, and say, look, it held the bottom, but what about these bottoms? It clearly went through them. And what about going through these tops, clearly going through all that, and then turning around and going the other way? See, we forget all that, and that's the trick that people with technical analysis do all the time. They isolate one little thing and say, see, look at that, but what you have to do is realize when you look at the whole thing and you look at it properly, it's almost 50-50, almost no different than flipping a coin. That's why, I try to have as many things going as possible in my favor, and conditions to be right when I'm playing the market. And when it's not good, I'd rather stay out. Um, Not that I'm lazy, but I just, like I said, it's not a matter of being lazy or not lazy. It's a matter of potentially losing money by trying to force something that's not there. It seems to me like everybody is looking at each other what to do. Yeah, I think so too. I think everybody's pretty confused. There's really no um, consensus. I think the consensus is that Aussie dollar can go lower. You know, and I actually had a trade years ago where I bought the Aussie using what's called forex options. It was at 80 cents, and I bought the right um, to buy it there at 80 cents, and I paid like 300 points in premium to do that. And I watched it go down to 60 cents, and I bought it 1 year. I had the right to do this for a whole year, and it went all the way back up to 80 cents. By the time the year was up, it went from 80 cents all the way to 60, all the way back to 80. My options expired, which means I lost my investment on that, and it proceeded to go to 105 after that. Now went back down to 90 and heading lower. And so, my thinking on this pair is, yeah, it certainly could, you know, um, it could keep going, but again, what happens with it, what's been happening with it, I think fair enough to say, um, in this area here. So again, since June, you got a lot of up moves here. Uh, you know, I don't think it's anything to sneeze at when you get a 3, 4, 500 point up move. Um, so the idea of just being short sounds good, but who's going to sit with a 3 or 4, 500 point loss? It's just not something I personally do, you know. So I really don't know when things are going to get better, but it's not like things are so bad. It's bad for the way I like to trade, which is day to day, because there's not enough volatility in the pairs I like to trade, and I can see that clearly from just looking at these numbers. This is the room to go numbers, and they're really falling off. They were 120, 130, and now they're almost half that. So that's a real problem. And the euro's been really, really bad. It's actually in half of what it was just a month ago. So, that's definitely a problem at the current time. But as I said, we do hit periods where the volatility is very high. And when it is very high and the systems are doing very well, that's when you have to make your money. Kind of think of it like a pro athlete, if you're going to go and play for Manchester United or Chelsea, you're going to make a hell of a lot of money now, but not 10 years or 20 years or 30 years from now. You're going to make it right now. And trading can be that way too. When things are really good, when everything's lining up, when you're getting good volatility, you're getting good trade signals, you have to make your money when the getting's good, and that takes courage, and it's also a thin line between too much and not enough. That's always a problem too, not to take too much risk. It's always a tough line to draw. So anyway, I'll leave you with that. I think I want to get going here. I'm starting to get a little exhausted here. So I'll see some of you tomorrow. I'm going to head to London, and we won't be back for any live trading. Next live trading date will be U.S. non-farm payroll on September the 6th. So that'll be our next live trading session. So I will see you guys all on September the 6th for live trading. Some of you, I'll see you for live training tomorrow for the news trading. And then the cycle of live training again starts on the 16th of September if you're interested in that. All right, guys, take care. Oh, UK bank holiday this Monday. Good to know. Thank you, Martin. Keep that in mind. Well, you guys enjoy your holiday. Speak soon. Bye-bye.